Hello, traders. Welcome. This is Francesco, and I've got an idea here which I hope you like. Essentially, what I've got is USD Now, today was the Central Bank of Turkey's rate decision, and decided to raise rates by 4.75%. And that basically made it quite appealing for people to buy lira, and that means obviously that the pairs like USD TRY have dropped. Obviously, this means that we've got a very strange situation here, because on one side you've got a bank with a new governor that has the approval of Erdogan, and so that means we want to see more of this in the future. But also we're aware that the bank has been under pressure by Erdogan himself, and there's not been really a regime of rate hikes in spite of high inflation and depleted FX resources in a central bank to fight liquidity hemorrhages. But today was a really good way to see that the bank's attitude has actually responded to the market pressures. But let's have a look at the chart there. You can see I've got two things here: USDTY in the candles, and the close line is the MSCI ETF iShares Turkey, which I've referred to a few times before. You can see they are basically a mirror version of each other, because when the MSCI kind of rises, the lira rises as well, which means that lira pairs basically have a fall. And you can see that really we've come down from these highs to quite a way down. We've hit the 100-day moving average. I'm on a daily chart. That's 100 period is 100-day, and basically we stop there. You can go down to lower time frames to check what the situation is, but we basically stall there. I actually bought the lira at some point through this fall, because I really think that it was a case of selling the rumor and buying the news. People kind of expect the new governor. Made rumors about maybe a rate hike, and so people expected that to happen. But really, I do think there's a lot more selling that people want to do of this. Because essentially buying lira is quite difficult. So actually people been selling lira, and that means that the kind of decade-long trend we've seen is actually going to continue, in my view. So I'm taking a bit of a gamble here, obviously, because it may not be the case. You can see as well that we've had these sort of bounces on the 100-day moving average, which is obviously kind of smoothing out price. It's not really a perfect tool, but whenever we sort of bounced on it, we kind of come back. You can see it back here in July. We had a really flat period here, and that was when the RSI was showing a lot of really divergence from price, telling us, screaming for some kind of sell-off, and that didn't happen then. We went back higher, and we really sort of came above the 80 RSI daily oversold into the 90s. We went to the monthly 90s there as well. So basically, this correction was due to happen at some point. But I think it's a correction personally. But then so many people say, oh, the S&P is just going through a correction. They don't really want to talk about risk aversion in a profound sense. In a profound sense, this has a long way to go. As you can see, that there is really quite a lot of room there to go in the last few years. But even if you take a couple of years from that currency crisis of the middle of 2018, we had a huge drop here. You can kind of measure that and go, well, that drop there isn't as big as this one. And that was just a correction again, because it carried on and we've gone over those highs and kind of careered above all the highs and onto new time all highs. And that basically means that, every time we've had that situation. Now you can see that we crossed the 100-day moving average back then. We could definitely cross it again. It's whether this creates a cycle of crossing and then back over it. I don't know, really. Nobody knows. Nobody's got the answers. Obviously, that would be too easy to trade like that. But I have been stung before trying to short this after this huge drop in 2018 into early 2019. I held short and sort of was break even, and then sort of lost money basically. So I just say that I'm not going to try that again. I've actually traded long this in October. Did a really huge, lovely trade. This is all demo trading, by the way. It's paper trading. I just want to say that, because people think I'm it. No, I'm not it. I'm trading demo. I'm actually starting a new round of live kind of trading with my own capital in January, and see how that goes, and I'll report on that. But for now, it's just demo trading, because my last round of trading was with somebody else's capital, which went well, but it was only for a couple of months, and then I gave like all of that back with profits of 100%. I was very happy with that, and I decided that I should kind of think about my next move and apply to a few things. So just kind of going back to this means that basically I'm taking a bit of a gamble here because I think this was a case of selling the rumor and buying the news. So once the rate hike happened today, you can see the movement there. It's significant enough, but it's not really as big as what happened coming up to that. Another really significant thing, I think, is that we actually have a lot of indecision. You see, the days before the rate hike, we had these little kind of dojis, or call them other things as well. But essentially, we've had 2 days of dojis in the last couple of days, and then today this. But I think that's kind of overdone. So I'm just going to stop there and say, essentially, this is quite a nice, neat little trade. If you trade it short, we're over 10,000 pips down. So well done. My hat off to you, but I didn't short. I'm actually long and in some kind of drawdown. Not a huge long, it's about 2,000 something in drawdown in terms of actual pounds. But yeah, so I'm actually not sort of bankrupt by that. £2,663 and 18 pence counting. I've got another trade I'll tell you about in the next video, but essentially just want to say that watch this space because we've had this kind of bounces before. I would just finish by adding one thing, if I may, which is we're going to add an indicator, and the indicator is going to be the RSI, because the RSI is really useful for this kind of thing. So if I put in the RSI, you'll see that basically we have quite a lot of divergence happening through the past. If I just put that in, the kind of average values, and then change it slightly to 80-20, which is kind of what I like to use. I like to use 80-20 because I think that's actually a better way to have that. So if I set it to that, you can see straight away that we actually have a lot of the there is something by Brown. She's trader and author, and she sort of wrote that we should use what's called a trend ID when you do RSI and oscillators. When something's uptrending or downtrending, it's in a strong trend. If it's uptrending a lot, you should use a 90-40 RSI, and I presume the inverse for downtrending. So I actually use 80-20. Basically, that kind of filters out the 70-30. Because in something that's quite strongly overbought all the time, you just get caught out. So basically, you just have it as 80-20. So that you can see that we actually came above 80 on the daily, but there was this kind of negative divergence because price was going up, and this was basically flat. These tops were at the same level, so it's kind of calling out for that, and it did come down. We've gone past the midline. We're actually down to these values now, into the 30s. So I think that's probably a good sign that we've overdone that sort of sell-off. Is a big sell-off. We basically haven't got much to sell, not many sellers to go. And if you kind of scroll back, you can see you've been sort of overbought quite a few times above the 80s. They're quite a lot of times. This is going back to 2018, obviously. Back in 2018, again, we were above these. We're kind of nearly at 90. And there was kind of divergence again there. The price was going up, and this was kind of coming down. So, it's not actually always the case that when you've got this kind of divergence, price will respond. Obviously, we know that's quite true. The other thing we can actually try is looking at the weekly just to filter things out a little bit more. And you see the kind of extremes. We've had these back here in the sort of high 80s. That didn't really, price came down a bit, but divergence was quite strong, and that really didn't lead to much sell-off really. The 2018 currency crisis, there was then the big sell-off there, and there was again severely overbought there in the sort of near 90s, and we come really quite high here in the 90s on the weekly currently, and we sold off quite a bit, so we're now down to kind of the 50s. So I think that's probably enough, personally. And if you go to the monthly just to check, you can see again the same story. You can see the extremes. The extremes back here in the near sort of 90 area in September 15. That really didn't lead to a sell-off, essentially carried on. So divergence there, but didn't really lead to anything. Divergence from that top to that top, but carried on. The 2018 currency crisis in the summer, there you see that top here on the monthly chart in the 90s, 95 almost, and then that sort of sparked a sell-off. Here we're not quite as high as that. On the monthly, we're sort of just shy of the 90s, we're actually in the 80s. So this sell-off, 3 months that was of selling off. This has just been a 1 month of monthly sell-off. So I think we either gonna see more selling off, and that has to be sustained, or I just wouldn't call a short from that. I think there's room to go higher because it's kind of been expected that there was this rate hike, but I think it's much. And just to prove that, one second, just to prove that, I'm going to give you this. The MSCI that I mentioned is actually available. If you go to this MSCI, you'll see that the volume data is actually what matters, and the volume data is what I really look for. Now on this, as I said, it kind of goes on from 2:30 to 7:30. You only got 5 hours of data. So if I put it on the I think that's what we need to do. We'll basically put it on the hourly. You see for today. Okay, that's for today. So 19th, we've got from 9:30, 1, 2, 3, 4, 5. Yeah, well, basically that's the day, kind of almost done. So we had this buy on the lira, the sell-off, and then it sort of dwindled away. The other interesting thing about this is that you see this buy here. There were three. Actually, I'll get back to the put it back to the daily because you can see it better. Okay, that's the daily there. Now, these lows, by the way, back here in March, during the COVID first kind of outburst, we had these lows were basically the same as or even deeper than the currency crisis of 2018. And there was a big rise in USD TRY and the other Turkish pairs, and you can see that there were huge kind of spikes in selling. And what I was going to say was that look at the volume size there, and we are kind of not quite at those levels, but it's fairly high nonetheless. So we had these big buys here. So remember that when this index gets bought, the lever rises, so USD TRY would fall. And this is the sell-off that I mentioned in the last few days in the lira pairs, expecting the rate to be hiked. But then after that buying, you can see the volume descending, and a little bit of a rise here today, but not as big as back here on the 11th, which was the Wednesday of last week. So what I'm going to say is the Wyckoff law, the third law, is that there is always it's basically effort versus result. So what that means is that we have a lot of volume and so a lot of effort, so a lot of activity, and it's buying activity. This dwindles away, and basically the result is that price doesn't really carry on. So it's kind of confirming that this dwindling volume is confirmed by the kind of bullish move actually dying out. And also, conversely, you can see that there has been a bit of a rise, but not as big as this, and prices shot up, but essentially it's not confirmed by high volume, not as big as that anyway. And then you have to look back into history and go, well, when was the last time that we had a rise that wasn't as big and price was rising? And you can see that was rising, but not particularly hard, and these sell-offs kind of actually even that out. So again, sort of look out for what volume is doing. This big rise here in volume didn't really achieve anything, and that sort of came down because there was dwindling volume before that. So again, it's kind of looking at the MSCI in the context of its own graph and seeing basically the kind of volume information there. You have to treat it carefully because it's all relative. So go back and see relative to before, what volume today in the last 3 days, those kind of levels, did they have an impact before, etc. So anyway, I hope you enjoyed watching my video, and I'll see you in my next. Thanks very much. Take care and stay safe. Bye.